Good day folks, this is TradeTaxPlus again, checking in for TradeTaxPlus, the first video for October 2017. And we're just going to touch on a few issues regarding direct exports. Now the first thing with direct exports is you must zero rate that export. You've got no option to zero rate that. So when it comes to indirect exports, you have the option to either standard rate or zero rate. There's no option when it comes to exports of direct exports of goods. So that's the first thing that's important. Now what is the critical difference between direct and indirect exports? Of course, direct exports, the person that sells the goods is the person that exports the goods. So that person also pays for the transport of the goods to an address in an export country, whereas in an indirect export, goods are transferred to the person in South Africa, the recipient, and that person takes it out. Now, the confusion often comes with what is an address in an export country. So we're going to look at one or two examples to demonstrate that point. Now, the most obvious one is the address of your client in the export country. So your client does business at Mr. Jones Street in Bulawayo. That is an address in the export country. But it doesn't need to be your actual address of your client in the export country. It could be anywhere just outside of South Africa. So if I deliver goods to an address just on the other side of Beitbridge in Zimbabwe, then that is an address in the export country. And from there onwards, my client can pay for the transport to the ultimate address where the goods are going to. So that's important to remember. Then you also have commercial arrangements. So I might buy goods in China and arrange for those goods to be delivered in, let's say, the UK. Those goods will never enter South Africa. So you can't export the goods because there is no export. But you're still delivering goods to an address in an export country, in this case, the address in the UK. So that's also a direct export. There's a third category of direct exports that's important. That's a sale on the high seas. That happens often. If I sell goods while they're still on the high seas, that is a direct export, and that is a place in an export country, the high sea sale. So when those goods are sold in the high seas, that is a direct export. A fourth category that's worthwhile maybe just thinking about for a moment is if I sell goods to another person in South Africa, and that person is a VAT vendor in South Africa, and that person tells me deliver the goods to my client's address in an export country. That is also a zero-rated direct export, even though I'm doing business with a local recipient, a vendor, because the instruction from my client was deliver those goods to an address in an export country, and as long as I pay for that, that's a direct export. Just something to remember. When you import goods, those imported goods are, if they put in a bonded facility and they sold out of the bonded facility, that sale out of the bonded facility is a zero-rated sale if it's done by a vendor in South Africa. If, however, those goods are imported by a non-resident, then the sale of the goods in the bonded facility is a zero-rated supply, or is an exempt supply. It's not subject to VAT, but it's also, if those goods are not cleared into South Africa, that's also an exempt supply in the hands of the non-resident. That rule does not apply to a resident. If a resident vendor imports goods and sells those goods while the goods are in the harbour but haven't been cleared yet for home use, that's a standard rated supply. And this is a very, very important distinction to make. From a SAICA perspective, we've gone to SARS and said sort this thing out, change the law so the residents and non-residents are treated in the same manner. But as it stands at the moment, the rule that goods that are sold in the territorial waters of South Africa, but before it's cleared for home use in South Africa, those sales would be exempt from non-residents if they make the sale, but it's a fully taxable supply at the standard rate if made by a local supplier. So keep that in mind. It's not quite the same as an export, but it's an important distinction to make when you're looking at the international movement of goods. So hopefully that helps you a little bit with understanding the topic a little bit better. The next video that we'll be dealing with will be dealing with Section 18. B of the VAT Act. Have a look at that. But for now, it's TradeTaxPlus checking out for TradeTaxPlus, Center of Excellence.